So the format will be same. I think most of you, I have met most of you in the group, and the format is going to be the same. We will be discussing about a specific topic, and at the end of the class, we can discuss. We can check a few questions, and maybe discuss those questions. And I'm there to respond to all those questions. Now, for this specific topic, what I have done is I have split this into two parts. We can have a session today, and we can have a session maybe tomorrow or day after, whenever the schedule permits. We can have this in two parts. Can you see the screen?
Yes, sir.
Okay.
So,
Yes.
Yashwant here.
Yeah.
So I just wanted to make a request. So I have joined the course initially. However,
Okay.
due to certain reasons, I was not able to attend the initial lectures.
Okay.
So after this session is over, can we just have a brief discussion for 5 minutes? Because then on that basis, I will go through the recorded lectures.
Sure. No worries.
All right. Thank you so much, sir.
No worries. Sure. So let's start this. So I have split into two parts. I will be discussing about the recovery, different recoveries in the domain of banking and financial institutions in India. When we discuss about banking and finance, one of the aspects which is very, very important and critical is the recovery of bad loans, right? Because the economy booms when the recovery rate is high, it is efficient, and there are different parameters, there are different procedures, systems through which the recovery becomes efficient, right? You must have seen reports coming in different newspapers where they say that there are so many bottlenecks in India. Doing business in India is a very cumbersome task. A lot of these investors coming from Europe and Southeast Asia and a few parts of America, they often complain that there are so many bottlenecks in India, be it bureaucratic bottlenecks, be it its laws, and they prevent investors from investing in India. Right? Now, to an extent, that is correct. And unfortunately, even after promulgation and even after enactment of so many laws in India, we still haven't achieved our best in terms of recovery, in terms of growth, because all these terms, when I say recovery, growth of economy, they all have to be read in conjunction. Right? So from that perspective, this becomes very, very important for banking and finance, for the growth of the banks in the country, for the growth of the banking economy in the country, that this entire mechanism of recovery becomes more efficient, and more of these loans can be recovered. Right? So a very important discussion with respect to, so today what I'll do is I will be discussing pre-IBC. So I will be discussing from 1991 liberalization measures, and then Narsimham Committee, how SARFAESI came into existence, what are the features of SARFAESI, how efficient is SARFAESI, or how efficient was it in the first 10 years, the basic aim, objective for which the code or the act was enacted, was it able to fulfill those objectives, right? So we'll be discussing that. One session I'm going to keep it for IBC, because IBC is something which is very, very relevant for you people, and even for us as professionals, it's going to be very, very relevant. So that is something which is contemporary, and most of the adjudications proceedings happening at this point of time when it comes to banking and finance, when it comes to insolvency, when it comes to bankruptcy, is being dealt by NCLTs, right? So that's how we'll keep the format. And maybe, when I end the class tomorrow, so we'll have two sessions. One is on pre-IBC, the other session will be IBC. And when I'll be finishing IBC, then, we can have a thorough discussion on these two eras. So very importantly, this recovery of bad loans, what is the genesis? How did it start? Now, in 1991, as you must have read in your textbooks, India opened up its economy to the world, right? When it opened up to the world, there was a stream of economy growth in the country. There were new companies coming up, both Indian companies as well as foreign companies, right? Slowly, gradually, privatization started. It emanated after those measures were taken. Many of these companies were, doing, as far as the parameters of a company is concerned, were performing. But the drawback of that growth was that a number of companies at that point of time, the companies which came up with the idea of growth and acceleration in India, economic acceleration in India, they took loans from different banks. There were certain banks at that point of time who were allowed to open up by lending. Of course, now we have, private banks, we have scheduled banks, we have public banks. But at that point of time, it was only a few banks who were allowed to lend, right? And a number of these companies, one common issue with these companies were that their spending was more than what they were earning through, through their manufacturing, through their services, right? So as a result, these companies, these new emerging companies, they took loans worth crores from different banks. And eventually what happened, that many of these companies had bad loans and they became non-performing assets, NPAs. Now, NPA is a word which got coined at that point of time, right? And you have, if you have to read, and you will be reading if you get into corporate practice or if you get into banking and finance practice, you will be reading more on the NPAs, asset classifications, and so on, under the provisions of RBI. So RBI comes with circulars and guidance. So you will be reading about NPAs, different types of NPAs on their website through master circulars and other reading materials. So you have these classifications, NPAs coming up. So a lot of these companies, they became NPA. They were declared as NPA. And as a result, the government thought that, this is something which needs to be addressed. Now, bad loans is not good for any economy, right? And India was not a very good economy at that point of time. It just started to grow. It just started to open up to the world. So, because of that, this concept of legislation, a framework came into being. And that's how something called RDDBFI, which is primarily, I think I would say, the first statute which was, which governed recovery of bad debts, came into being, right? This is basically called Recovery of Debts Due to Banks and Financial Institutions Act. And this came into being in the year 1993, right? Because if you now see the story, if you see the background, it's 91 when the liberalization measures or privatization started in India. And it was not even 2 years when people, not even a year when the government realized that this issue of bad loans has become rampant, and this needs to be curbed. And that's when this particular act came into being, right? Now, this is before SARFAESI. Of course, SARFAESI came later, right? What was the reason for this framework? Reason was that, generally for recovery, general litigation which was prevalent at that point of time was not enough. Why it was not enough? Because it was very slow. There were minimum number of or limited number of judges, right? There were no specialized judges to deal with that kind of new transaction which was prevailing in the society. Though banking is something which is a very, very old industry, right? There are traditional bankers. There were traditional bankers, but something of this volume, especially when a high-tech bank offering loans to companies, corporate loans, understanding of the nuances, understanding of the international terminologies, commercial terms, commercial understanding, that was not there amongst the judges because that training was not there. So civil litigation was quite slow because of that reason. Resources were not extensive. When I say resources are generally the infrastructure to specially look into those type of matters, recovery of bad loans, right? It was not there. Now you have IBC, you have NCLTs in almost all the states in the country, right? More and more NCLTs are coming, more and more benches are coming because the government is investing. Judiciary is taking the interest to get more and more tribunals set up to take care of this issue. But this was something which was not there at that point of time, right? And because of that, because the judges were not, I would say at that point of time, they were not equipped to handle those matters. They took time. There were not enough judges. So, there were uncertain outcomes due to procedural delays. There were procedural delays because, of course, if you cannot decipher or if you cannot understand a certain matter, this will take time. And that happens now also in many of the civil courts in India. And that is perhaps the reason why we have so many pending litigations, right? Of course, there are different factors, different reasons for that. So this specific, law or statute, which is RDDBFI, this came into being, and this introduced the system of DRTs. Now, what are DRTs? What are DRTs?
Debt recovery
Tribunal.
Correct. So they were established under this act for the purpose of expediting the debt recovery. Issue was that the recovery was very slow. Even the recovery was not 100%. It took a lot of time for the companies to pay off the loans or the banks to take back the loan, right? Or to recover the bad loans. So DRT came into being. But there were issues with DRTs as well, right? There were limitations and same limitations. There were no specialized judges. There were no specialized expert people who can look into these matters, right? So, and very important aspect, and I'm sure you must have read in your textbooks, in your law school, and as well, I'm sure in these sessions you must have read about mortgage. Now, everything comes down to mortgage, and at that point of time, mortgage was very prevalent, right? So, enforcing mortgages by your foreclosure, foreclosing your properties and taking back assets was a complicated task. It was I would say there were many issues. It was not very simple for the banks to enforce those mortgages, right? So this is the background. This is the backdrop to SARFAESI, right? Now, RDDBFI Act, it was not something which was efficient. DRT, not efficient. And these challenges, it led to procedural delays, low recovery rates, and overall, if you see the banking sector's financial stability, that was at stake. Correct? So this all of this led to the enactment of SARFAESI. SARFAESI came into being, and that's how a new era in the recovery of bad loans started. Correct? And the need of the hour at that point of time was to get a robust and streamlined recovery mechanism, which was not there, unfortunately, and because of which the economy was facing depreciation. There were inflations, there were different types of issues in the economy. Government was not the ambit of the earning of the government was also not to an extent where it could sustain the economy. It could it can have avenues for its population. So these measures were very important, and Narasimham basically was a RBI governor, and he was basically given the task by our ex-prime minister and our ex-finance minister, Manmohan Singh, to look into these issues, these bottlenecks, these problems in the recovery of bad loans. And he was the first one who suggested to the government to basically enact a very, very strong legislation that can look into this issue of bad loans. Right? Now, understanding SARFAESI is important because only when you understand SARFAESI, you will be able to appreciate how IBC is a step forward, and it is something which is which has, to a great extent, of course, there are issues with IBC also, but your understanding of IBC and how it changed the entire landscape of banking will be critical. So just hear whatever I'm saying with respect to SARFAESI. These are the things, of course, are going to be very, very important for you. The applicability, the features, why it failed, and how IBC came into being. So you have to bear with me for some time and understand these concepts really well. And that is perhaps the reason why I have split this class into two. Okay, so the first objective of SARFAESI was to empower banks and financial institutions with the ability to enforce security interests without the need for court intervention. Right? The overall aim was to expedite the recovery process, which was not present in the earlier frameworks, earlier legislations. Correct? So in order to expedite recovery process, minimize litigation, enhance the overall financial stability of lending institutions. So when I say lending institutions, banks, NBFCs, financial institutions who were allowed to lend, right? Because only when they are able to recover, they can actually grow in the banking sector within the economy, right? So this particular act of SARFAESI Act, it applied to financial institutions like public and private banks, NBFCs, non-banking financial companies, ARCs, Asset Reconstruction Companies. Can anyone tell me what are Asset Reconstruction Companies? I discussed this in my first class. Anyone?
So these are basically financial institutions,
Right.
which acquire these stressed assets from the banks and then monetize those assets by issuing securities securities for issuing securities, and then they find a suitable buyer and sell off those assets.
Correct. So securitization is the main function of
Right.
these ARCs. Correct. And that was perhaps exactly. So that was perhaps the feature of SARFAESI as well. securitization of financial assets. You must have read this term. You must have seen this term in newspapers, in the news, right? What is securitization? Now, securitization of financial assets. So basically, SARFAESI says it facilitates the creation of ARCs, which is your asset reconstruction companies, that specializes in the acquisition and management of NPAs, non-performing assets. So there is a specific, specific company known as Asset Reconstruction Company, which are financial institutions which can sell these NPAs. So basically, financial institutions can sell these NPAs to these ARCs. So if a bank has a bad loan, for example, right? And if the bank is having NPA issues with some of its borrowers, right? It can sell these NPAs to these ARCs, Asset Reconstruction Companies. And these asset reconstruction companies can then undertake the task of asset reconstruction and recovery. Recovery, which was something which the bank couldn't do. These ARCs were given that right to recover that company as well as the loan. Now, there were provisions which gave these ARCs right to lend or provide monetary support to these companies so that the company can be a going concern. The company can function, right? So that was the first function. The second function or the second feature of SARFAESI was the enforcement of security interests, right? Now, again, when I say security interest, SARFAESI as an act was applicable only for the secured creditors, not for unsecured creditors, right? So when I say enforcement of security interest, secured creditors, bankers, empowered to take possession of the secured assets and thereafter selling them. Correct. So that was a second feature, that, in the event there is a bad loan, there is a notice that has been issued, still no response from the borrower, right? Then there is something called possession notice. Of course, I'll come to that and I'll explain you what are those notices under SARFAESI. But just understand the feature. Secured creditors, and they were empowered to take possession of the secured assets and thereafter can sell those assets without the court's permission or intervention. So that was the major feature which was applicable, so that there are less litigations and less, in terms of time, in terms of tenure, lesser time, as was not applicable when DRTs were in picture, right? Now, third feature, very, very importantly, is the simplified recovery procedures. Now, something which was also mentioned in the Narsimham committee, and this was taken straight from the Narsimham committee, right? Where it said that the procedure is going to be very clear, structured procedure, and step-by-step procedure. Procedure is going to be step-by-step. It's not going to be a very cumbersome or a complex procedure. And, procedure will be to issue the notices, taking possession, and conducting sales. So 3 steps. You issue the notice, ask the borrower or demand the borrower for the debt or the principal interest, whatever is applicable. Then you take over the possession. If again the borrower defaults, you take the possession through possession notice, and then you conduct the sale. There are different ways of selling, right? So these were the features, and these were very, very important features, need of the hour at that point of time. And to a great extent, and this was also discussed in many of the sessions in the parliament, where it said, where they discussed and applauded governments resolved to recover the bad loans. And SARFAESI as an act, it really helped in, help addressing a number of these issues. One was that, this act efficiently recovered bad debts. It reduced the volume of NPAs. Of course, NPAs was widespread, was rampant, but it reduced to a great extent. It always, it also improved financial health of the financial institutions, very important for the economy, right? It also became a deterrent for the borrowers who were borrowing, like the companies which were defaulting. It became a deterrent that, okay, there is absolutely no recourse for me. Of course, there is a recourse that you can go file appeal and so on. There were limited grounds under which borrowers can also appeal and can get the judgment in their favor, order in their favor. But it became a deterrent for the bad borrowers, right? And to use the funds, whatever funds have been given in a efficient manner, in a proper manner. So it became a deterrent for them to ensure that they use the funds, whatever funds they have taken as a loan or a from these banks in an efficient manner. So that was the very, very welcome. I would say a lot of those borrowers at that point of time were deterred, were very much, they were very much, foreseeing that their assets are going to be banks' assets in the event they default, right? Now, the third feature, which was very, very important, is many of these asset reconstruction company, as we were discussing, it facilitated the restructuring of these distressed assets companies. They also played a very, very important role, right? So this was SARFAESI. And can anyone tell me when did SARFAESI came into being?
2002.
Yeah, correct. So this was much, much after RDDBFI Act came into being, and there was a need and there was a need to basically come up with a new legislation, and that's how SARFAESI came into being. Now, the process involved in this act were very simple. As I was mentioning, it was in three parts. First was, of course, the overall aim was to recover. A demand notice. It always starts with a demand notice. Same with IBC. It starts with a demand notice. Creditor would, issue a demand notice to the defaulting party or a defaulting borrower. Now, that notice will have the specific amount. So whatever the default amount is, that notice will have that amount. And what happens, that notice will also be, including the actions that may be taken against the borrower by the creditor in case the borrower avoids to repay the loan, and what are the actions which the creditor can take in case of a non-compliance of that particular notice. So, of course, I'm not getting into the specifics of number of days under SARFAESI, what is the number of days under which a demand notice can be issued, what is the time limit which is given to the borrower. I'm not getting into the specific. That is something which you can read in the BEAR Acts also, but just understand the process. It is step by step. You just need to understand step by step. First is demand notice issued. Demand notice goes to the borrower, and borrower has to pay. If he avoids, there are certain actions. Now, second is, what are those actions? Now, if the borrower fails to comply with the demand notice, right, within the stipulated period. Now, stipulated period is the number of days which you will go and you will read and understand. Now, if the borrower fails to comply with the demand notice within the stipulated period, the creditor can take the possession of the secured assets, right? There is a foolproof method there is a specific method, very clear method for the creditor to take possession of the secured assets and issue a possession notice. Again, first was the demand notice, second is the possession notice. And this notice should inform the borrower about the taking over of the asset. This notice will have all the particulars of the property. It will give all the details of the assets, and this will inform, it's a formal intimation to the borrower that its property or property which was a secured interest or a collateral, it's going to be taken over by the bank. So first is demand, second is possession, third, what could be the next step? Can anyone tell me?
Recovery from the secured assets.
Yeah, see, everything, whatever I'm discussing is part of the recovery. It starts from the demand notice, issuance of demand notice. That's the first step, right? Failure to pay even after demand notice, then borrower, then the creditor will issue a possession notice. And after the possession notice, it will take over the assets. Now, what is the next process involved?
So selling of those assets to recover the debt.
Correct. Absolutely. See, it's very logical. And I'm telling you, in all the laws till now, you see India or you see the English laws or the American laws, all these laws are somewhat similar. It is just that there are certain laws where the steps are slightly different. There are slight deviations. But overall, if you understand one law, you will be able to understand all the similar placed laws. So if you understand SARFAESI, you will also understand IBC. Of course, the objective of all these acts are going to be very, very different. It is going to be different. But overall objective is only to deter bad loans and expedite recovery of bad loans. Correct? So that's the thing. And absolutely right. The next step involved is your recovery of sale, process of sale. Now, process of sale, requirement, how the process of sale will happen, there will be a requirement. Now, the creditor, after issuing the possession notice and taking over the asset, now it has got the asset. Now, the creditor, what the creditor will do? The creditor will put this requirement in the public notice of this intended sale. Whatever that sale is happening to recover the bad debt, it will go in the newspaper. It will go in the public domain. Notice will be published in 2 newspapers. It will go to, so these are all the steps. And I'm telling you, these are the things which are also applicable in IBC. IBC is a code, and there are different rules govern which facilitates the steps. You will read the similar steps in those rules as well. Of course, those are for different purposes. There is something for amalgamation, there is something for merger, there's something for demerger. All those are governed by IBC, read with Companies Act. I'll come to that. But somewhat these steps are very similar. Now this, this notice will go to the newspapers, 2 leading newspapers. One will be in your local language. One will be, the other one will be your national language. And the authorities, what they will do, or the creditors, they will do, they'll affix this specific notice on the property, the exact property, wherever that property is, which was given as a collateral for the loan. Okay. Now the next step will be that that particular property will be assessed. It will be valued through professional valuers. They will get to know, creditors will get to know about the exact value of the property, and that's how the sale happens. Right? There are different ways to do it. Of course, sale can be of different manner, and a bank has full rights under SARFAESI to conduct the sale in any manner which it feels is correct, efficient, and Of course, there are different ways. It is not that they have to do public auction or they have to invite tenders. I mean, there can be different ways of doing that. But some of the common ways through which banks tried to recover these bad debts was through public auction. Public auction is why public auction? Because public auction is the best way to make it look very, very transparent, the entire process of sale, right? So, because it is something that is, again, it is published, and people are aware that there are certain assets which are going to be sold as part of the bank recovery process, right? So when that happens, it starts with a bidding process that allows, there are multiple participants, multiple people who come and who bid for this asset, this particular property. And that's how it ensures that, this entire process is basically fair and transparent. Because it is, if I see, or if you see, or there are some 10, 20 public or members of the public, if they see an advertisement on the newspaper, they'll see it, they'll see the price, they'll go, they'll bid for a price, the bidding will happen, and everything will happen in a very competitive environment. And there'll be a competitive pricing, right? So everything is happening under the notice of public. Public is viewing, or, public is the audience. They are going through this entire process. So that's how it becomes very, very transparent, right? Then, of course, there are different ways which were not very sought after ways, but there were ways where, banks came in touch with the intended buyer through different means, right? Something which was not, and these were majorly private negotiations. Banks generally discouraged that, because many a times those were challenged before the court later, right? Then the third way was to invite tenders, soliciting your bids through public notices. Again, same process. Okay. Now, you must be wondering, these are the steps, these are the processes which have been given to the banker. And SARFAESI, as it sounds, looks like a boon for the lenders or the bankers. What about the borrowers? Do you think SARFAESI as an act, of course, you will be reading more about this, there were provisions, or do you think, and anyone, if anyone has read or has dealt in SARFAESI, can tell me if SARFAESI had anything for borrowers where they can challenge the entire process on certain grounds? If yes, what are those grounds? Anyone?
So, yes. So Section 17 makes a provision where it states that, any person who is aggrieved by any of the actions of any secure creditor can go to the debt recovery tribunal and challenge those. Now, if we want to have a specific ground, we can always say that, the initial notices of asking the borrower to come and pay the bad debt that was not served upon them, or the possession notice under 13(4) is not served upon them. So those kind of measures can be taken, which are very technical. So there are no liberal measures where one can go and say that this is my ancestral property and how can you take that back. So those are the grounds which are enumerated under SARFAESI.
Correct. Of course, there are other grounds as well, but yes, absolutely. There were, so see, any act, and this is a cardinal principle, and this is not just specific to this act, but any act. One of the I would say one of the defenses, or one of the grounds which a lot of these borrowers or any party with that effect can take is the arbitrary provisions, or not arbitrary provisions, but arbitrary actions. If there is a certain legislation which is giving you, certain rights, right, certain mechanisms to enforce your rights, you have to do it in a proper manner. You have to ensure that whatever actions you take, it has to be in consonance or adherence to that particular legislation. Same goes with our constitution, right? Whenever there is certain action that is taken by the government, and or any measure or any legislation that comes to the parliament, that gets passed by the parliament, sometimes those legislations go back to the court, right? And Supreme Court looks into the efficiency, looks into the legal fairness, transparency with respect to the enactment of those legislations. It looks into the fact that whether the cardinal principles of constitution has been met or not, whether those principles have been adhered to or not, right? So that becomes it happens with other legislations as well. Constitution as a whole is a code. Now, all these legislations, the best way to test these legislation is to ensure that nothing that has been, any action that has been taken under that specific legislation is arbitrary or non-arbitrary, right? So any action that has been taken, if you take some action and if you don't comply with some of the provisions, which are very, very important, when you take those specific provisions, take those specific steps and don't adhere to specific provisions, then it becomes arbitrary, right? So arbitrariness was something which gave these borrowers some hope with respect to the actions taken against them. Majorly, if I have to do an analysis, and even if you read about this act, it was majorly for the lenders, right, to recover the bad loans. So there were not many grounds as such, correct? So arbitrary actions was one of the ground. Second, systematical error, or maybe there are some minor error with respect to your valuation. Now, when you are valuing the property, you're not doing it in a correct way, right? In the same way, the notices which has been served, right? Demand notices, you have not served the demand notice, and you have just reached the spot and you have taken over the premises. Again, you need to first, you need to have a bad loan first. You need to have a default first. Then you issue the demand notice. Then you issue, if the demand notice, there is some issue with respect to the demand notice, not issue, but if the borrower doesn't obey the instructions given in the demand notice, then you go and issue the possession notice, right? So the point is that if you don't adhere to one of these steps, right, then that becomes a ground for challenge. That becomes a challenge, right? That becomes a ground under which the borrowers can challenge the irregularities and the other things, other aspects of the action, right? So these were some of the steps. Now, from all of this, again, SARFAESI SARFAESI was of course a step forward, but again, there were issues. There were issues with respect, all those issues which were prevalent in the past. There were some additional issues that came up, right? And these were not just restricted to, your resources or with respect to your infrastructure, but other issues as well. Law and order. There were certain districts where the bankers could not go, right? These were red zones. At that point of time, India had almost, out of the total number of districts, we had almost 60 to 70, almost 70% of the districts which were designated as red zones. And red zones, as you understand, are Naxalite hit zones, right? So there were those issues as well at that point of time. But of course, that is not something which you can, rectify or cure through this act, correct? But there were issues with the act. There were jurisdictional issues. There were, pecuniary jurisdictional issues. Not all the players were, under this system. it was only applicable for secured loans, and so on. So there were limitations, right? And that's how these two acts, your RDDBFI and SARFAESI, failed to a great extent. And for a long period of time, like from 2002 till 2016, there was no robust mechanism or framework through which bank could recover loans. Of course, there were guidelines issued by RBI from time to time. There were asset classification, reclassification of the of the companies, and so on. But there were issues, and all those issues, and during this time, and I would strongly urge all of you to read the discussions from the parliament standing committees, from the parliament sessions where people discussed these issues, and especially the finance ministers, people who are good in economics, right? You will see a lot of these discussions, debate in the parliament with respect to this issue, especially when Malia, the case of Malia, not just Malia but others as well. It became very, very something which was which took the attention of people, public at large, and it was discussed at length. That's when people advanced different theories, different processes, different loan recovery measures which the other countries were taking at the same point of time. So after all those discussions, after doing that analysis and cross study of the insolvency, of the bad loans of different countries, how a specific country like a Singapore is handling bad debts, how American states are handling bad debts, what is the mechanism? When people started reading about these mechanisms, think tank came up with those ideas. They put all those ideas into one document. That document went to the parliament, and that's how the discussion started happening, and IBC came into being. Of course, the legislative framework or the objective of IBC was very, very different. Very different. It was not just recovery, but it's not to do with recovery, but to do with resolution of stressed assets. Of course, I'll get into the meaning of these two words in my next session when I discuss about IBC. But this is basically what the background is to IBC. Okay. Now, so for today, let me keep it very short. What I'll do is I can, we have 8 minutes, 7 minutes. We can discuss. I'm sorry, I didn't get your name. You wanted to discuss about a few things from the previous class or the sessions. Please feel free.
Yes, sir. It's Yashwant. So
Hi,
basically,
Yashwant.
this is the first lecture I am attending today. And
Yeah.
just wanted to get a brief of what exactly happened, because I was not able to go through the modules. And I was
Sure.
told that we'll be starting with fourth module today. So I was just
Right.
wondering if I can have a little brief of what exactly happened in the previous lectures. So, and accordingly, I will cover up with the recorded lectures.
Sure. Yes. So basically, see, there are different mentors. There are different teachers who are giving these lessons. I have been assigned first, fourth, and I think seventh module. So I have been given 3 modules. So see, this entire course, and as I started, I can tell you about my last 2 sessions where I discussed the overall framework of loans. What exactly is a loan? What is the different mechanism of this practice? What is banking and finance? What is different concepts under banking and finance practice? Specifically, I was giving more and more examples of my own experience in this sector as a banking professional. And different legislative frameworks which we discussed. I think we have already discussed about DRTs and RBI, genesis of RBI, and similar organizations, which generally are the regulators in this domain in the banking industry. So we discussed those aspects. I think later there were discussions, and I'm not sure if in second or third module you have read about the overall understanding of the loan, the transactional document. I think it is yet to come. So perhaps that's the basic framework that we have taken so far. We will be discussing everything to do with banking and finance. Banking and finance is a vast practice. It engulfs different statutes, different legislations. It's not just Transfer of Property Act. There are different places where you need to go and read. There's Companies Act, there is Contracts Act, and so on. So I discussed about those legislations as well. I discussed about those laws as well, specific sections under those laws. So that's one part. Then RBI plays a very, very important role. We discussed about RBI as well as a regulator of the banking industry. How is RBI relevant? And what are the things, what are the specific relevant things which you can, take from RBI in terms of master circulars, in terms of guidance on this banking and finance sector? I think I discussed that. Yeah, I think majorly that is what I discussed. That was an introductory lecture. And then today we are discussing these acts, very, very relevant acts, where I will be discussing these acts individually, and I'll tell you how these acts are now playing in the sector. Especially if you are, if you become a banking lawyer in future, how are you going to play with these acts? What is relevant, what is not relevant in terms of recovery now? And what is the general or a standard practice at this point of time of all these, institutions, banking institutions? Because I have been associated with a few banks in the past. I can tell you from my experience, and also this practice of banking finance continue till now, right? I think I also discussed a few live transactions where I discussed about restructuring, how restructuring happened, how a company where I worked somewhat defaulted in certain loan transactions, and what exactly we did as legal professionals, right? So yeah, I think these are some of the things which we have been discussing.
Thank you so much, sir. And so before, I believe Siddharth has also raised his hand, I just have one more question. In any transaction between a secured creditor and a borrower, if the mortgage deed has an arbitration clause, so would that curtail the secured creditors from going to DRT, or they will have to resort, or for example, if an OA has been filed by a bank, and then can a borrower come with a Section 8 application and say that the DRT does not have
very,
a
very valid question, and something which has been answered as well in one of the recent judgments. This is a part of my second session, which is maybe tomorrow or day after. Let me take it up in that session, because I will be discussing on this aspect of mortgage.
Sure, thank you so much.
Let me take that. Yeah, next question, please.
Sir, I wanted to know that how can we access the recorded lectures?
I think let me speak to Akhya, who's the coordinator for this course. I'll tell her after this class to give you the access to the recorded lectures, because these sessions are getting recorded. So I'm sure you will have the access.
Thank you, sir.
Yeah.
Just to add, the link for accessing the recorded classes is already shared in the group.
Great. So that answers. Yes.
Would we have to download an app to access those, or what? Just by clicking that link, we can access that?
I think it's going to be see, I'm not very sure. I will have to ask Akhya to help you guys. But I think you will be given a link where you will go to a drive. It will go to your drive, and that's how you will access through the drives. Generally, that's how it happens. I have attended a few sessions during my first year of my profession, and most of those were in my drive. So that's how I accessed. But I'll check with Akhya and let you guys know on that.
Okay, sir. Thank you.
Sir, you told us to read the parliamentary discussions and about the SARFAESI issues and
Right.
framing of IBCs. Can I know where are these available? How to access them?
I will share a few links with you guys. Maybe I'll share that with Akhya and Akhya can share with you. These are very simple YouTube links where you can just go and, there will be recorded videos of 5 minutes, 10 minutes, specifically on these issues. On Narsimham Committee, on SARFAESI, need for an act, need for IBC, and so on. And there are certain very, very good articles also in the Hindu, Indian Express, and so on. So what I'll do is I'll just, put everything in one document and I'll share it with Akhya and Akhya will share it with you.
Right, sir. Thank you so much.
Yeah. Any more questions? We can, it's 9 and I have to exit. Anyone, I mean, what we can do is we can discuss all these questions tomorrow also when we were ending, when we will be done with IBC. I think then it will be more feasible to discuss more on these issues. I mean, you can have more questions. You can ask me now, but we can, I mean, that's the format what I have done in the last sessions also, 2 sessions. Let me know. If no questions, then we can call for a day. No questions. Okay. Okay. Let's again meet tomorrow or day after. Thank you so much.